Okay, good morning, everyone. Is Today's date is a Thursday, 21st of September 2021. So on 7 a.m. just before the open of the London session. So seeing how the market has been trending yesterday after FOMC yesterday that America relaxed their interest rates. I'll not be talking much. I'll just be giving signals of what the kind of trades I'll be taking today. So I have gold, I have US oil, I have USD. So I'll just be talking about those three trades, and I'll be showing you how I've been following up on trending this particular um assets that I've given you to the downside. Are you getting? So we're in a downtrend on this particular asset. So I'll be showing you what I can see and what confluences, how I took my confluences. And so probably I should start with US oil because US oil is clean. So the first confluence is that US oil has been over both on the daily, so we are going down. That's the first confluence. Second confluence is that my MACD is going down, so and we're about coming down to 0.5 again. So that's the second confluence on US oil. Then the market structure will be the third one. So doing a retracement on US oil right now as you speak. So how do I know this is a reversal? Come to your candlestick pattern, third confluence. I would have entered straight since, but let me just finish this analysis. So the third confluence is your bearish engulfing candle, which is a reversal candlestick pattern to the zero down to the downside. Then the fourth confluence would be where we're traveling to. So come, and this was the last low we had, and right now had a reversal candlestick pattern. So we're likely traveling back to 0.5, which is the fourth confluence, or traveling back to this previous high, which is about 400 pips from from 89 to 85. That's about 400 pips. So this trade is very, very valid, as you can see, traveling to the downside. And what's the fifth confluence? Our fifth confluence is always a change of character back to the downside. So this is the daily structure, and since it's a daily structure, remember what I told you. You want to trend your daily, go to your 1 hour. If you want to trend your weekly, use your 4 hour structures. If you want to trend your monthly, use your daily structures. So the market is telling me that reversal is in because of this, what's it called? Because of these resistance we have at the top side here, and this whole area is a supply zone. So if that should be the case, I think a reversal is in, and for us to know that that reversal is in, we have to have a change of character on our lower time frame. So on my lower time frame, which is my 1 hour list chart structures, I'll show you what I can find too. On my 1 hour list chart, you can see that we had this structure, this previous resistance on support, that got broken with this 1 hourly candle. So you trend your structures with your lower time frame. So my lower time frame, this previous area broke to the downside with this candle. So for us breaking that to the downside, we test back to that particular zone, because this was a head and shoulders pattern that happened here, or you can just call it a break of support, now turn resistance. So for that to happen, that means our reversal is what in, and for that reversal to come now, this market is running already. I think I'm on a sniper trade from US oil here, so I'm supposed to take new entries also, but I'm waiting for the market. Definitely, I'll just wait for the market to come back to this previous, what's it called, support resistance area on the 1 hour chart. So don't FOMO. I'm not going to FOMO into this US oil. I'll just let that one run because there's no entry. I usually wait for proper entry. So why am I waiting for proper entries? That's because we are supposed to do, go to the main target. The main target is $88. So I'm about, if I was supposed to take a trade, I would have just taken a trade from 89 to 88, which is about 100 pips to the downside already. Come back to these major areas before finding a bounce again. So what do I mean by that? I'm just using GPS populations to say, okay, The next trend will be from here to here. So if that should be the case, that means that if I'm taking an aggressive entry or following into this to take 100 pips, no problem. Definitely we should continue trending to the downside by doing this, then finding support here, then coming back to 0.5, which is 89.5. Then we can enter more trades again to continue breaking this market to $85. I guess so. This is what I'm expecting. So one of my entries will be at 85 to 89. No, 85.59 to 89.59. So these are the two values I'll be taking my entries from. Then my stop loss above here, then take it to 400 pips to the downside. So today is Thursday and the market moves on Thursdays and Fridays. So you should watch out for your US oil. So watch out for this break to the downside 100 pips, then probably do a retracement back to these areas. Do a retracement back to these areas, the 0.5, and complete a proper head and shoulders pattern that will break to the downside. So complete a proper head and shoulders pattern that will break to the downside retest to go to $89. So if you are not in a trade already, these are things, places you should watch out for. So it's better that you trade your bigger, what's it called, short patterns, break and retest. I guess in it because that's still $400 to the downside. So we're trading retracement, but they say the trend is your friend, and US oil is massively bullish. So don't get carried away when you're seeing some large green candles coming in. So this is just retracement we're about trading right now. So this is not an entry. We'll wait for proper entries. The proper entry you'd have gotten was a retest upon this broken structure that's giving us a reversal back to that. So since that reversal is set in, we have this trade for you. So if you've not taken this entry of this break, which actually brought about a bearish engulfing candle on the daily, you should have known that, okay, I should wait. So you're not taking that one, done a retracement to, $88 to this previous, structure, previous resistance. Now it's going to turn support. Then come back with a Fibonacci retracement to 0.5 isn't it, before we break to continue going to the downside. So it's not a must that we break to the downside, can just reverse from places like this on the lower hourly chart. But the reason I'm saying that we might definitely go to 85 is because if this truly a retracement, because if truly this is a retracement, that means we're supposed to do a 0.5 retracement back to the downside to these major daily support zones. So how do I confirm that we're going down? The confirmation is this. I'm giving you 5 confluences now. The 5th confluence was a change of character to the downside on the 1 hourly chart, which I use in driving my daily structures. I use my 1 hourly trend to drive daily structures. So that's the right English. So why did I know that reversal was in? It was because of this change of character we had. So this market was on an uptrend, tried to continue the uptrend, it couldn't. It immediately we broke to the downside and came back to retest. So if you've been trending, if you're in US oil, you have seen that we came back to our 0.5, 0.618 Q zone where the market, is continuing to trend to the downside. So if you're not in interest from $91, you'd have been in it from $89. But this is just a minor 100 pips straight to the downside. So I'll let that one go. And if you bring the 6th confluence is always knowing your targets. Your target, I have what is called condition, entry, stops, and targets. So my stops for this would have been at least $92. Then from $91, 100 pips. Are you getting it? Then take a 200 pips, that is a 1 to 2 to the downside. For now, we have a target of, look at accurate. US oil has been accurate. Then put your stop loss here. So you can see that we're trending back to 0.786, which is at 88.20 to 8.50. So a minor uptrend is going to come here. That's probably because of the lower time frame structure that does not trend perfectly well, like your 4-hourly and daily structure. So you just use your lower time frame, like your 1 hour, 15, 30 minutes to, take entries and trend your higher time frame structure. So I'll probably leave this one to slide. You getting it, then find the proper retracement to 0.5. So if I should leave that there, then I'll just say that, okay, what I'm expecting if we get that bounce would be a retracement back to 0.5 retracement level. You can see that as I'm bringing the values in at the correspond. So the retracement level is between this Q zone from 89.96, which is $19, to 89.5 to 89.62, which are these two values. So this way I will take my values on US oil from. Are you getting it? These are the two values you should watch out for. So take a trade again to probably 80, what's it called, $88. That's from, let me just say $90 to $80, 200 pips. Are you getting it? But we're likely to break this particular market from $90 or probably these areas, depending on how you're seeing your trend. You are watching the market, so definitely you see whatever is happening with your candlestick patterns happening on your daily time frames. Are you getting it? So use a daily structure, so your candlesticks should be happening in your daily structure. So since we got a bearish engulfing on the daily, definitely if this retracement is coming in, we should get a bearish engulfing also. That's 2 days. The first day will be red. The first day will be green, and the next day will be, big red, which is a bearish engulfing. So it gives you hours or days to, plan your trade, not to form in this trade. That's why you're losing money. So the market will not rush you, to not force you to enter into the market. You just maybe your daily structures are already planned, as in your structures are already set in, and you missed out that particular trade. That's when you now said, okay, if probably you didn't see this and you know your structure privilege and the market is here already, you can take your trade and put your stop loss to continue to the next consolidation. So this is a daily structure and it's trending perfectly well. So don't FOMO, don't rush in the market. Always wait for your proper entries. I'll give you proper entries right now. This is not an entry. It's just too foolish if you just take a trade because you're looking for 100 pips. So this US oil said much right now. Yes, so this US oil, remember, you have a previous area of value here that I'm putting here. So your fifth confluence is always your change of character happening, the market switching on you to the downside. Are you getting it? But don't forget your seventh one, your major areas of support and resistance. Are you getting your major areas of supply and demands? Are you getting it? So we have a minor one there, but this is a 1 hour structure. You can't, trust it. So I will continue my daily structure. So my daily structure states that we might be coming back to this major daily, structure zones to continue trending to the upside. So it's imperative that is either we're coming back to this previous one to come and take all these guys out before trending to the downside, or the market will continue to the downside with this. But definitely, since this is a daily structure, always just stay on your 1 hourly chart. You see how it's swinging. So you put your risk to it and take your reward. So whatever is happening here right now, I'm now showing you that daily structure at the upside. So it's either will be coming down a bit to continue to take all those liquidity at the back out, those liquidity. So I think I'll just do this US oil and upload, then do gold and upload. So let me go to the 4-hourly chart. I said I wanted to give on the signal. There's still liquidity here. And getting so there's still liquidity here. So it might just definitely do what? Come back up here to take this liquidity. Because the market lost liquidity. There are some people that place their stop loss above there that, we are going down. You get me? But I don't joke with my liquidity concepts. You get me? So I don't joke with those liquidity concepts. The market might still want to take those liquidity, it before continuation to the downside. So that means that it might come back and invalidate this before finding liquidity to go to the downside, to come to the downside. So watch out from whatever is going to happen here. So the moment you're saying we're getting a bounce, you can take a trade in the direction of the trend. So it's not as it's not we're not supposed to trade against the trend. That's why I say that the trend is your friend, don't trade against the trend, because right now we're trying to drive this market to 0.5 and 0.618. Sorry, 0.5, 0.618, minor retracement to the downside to continue this market. But at the same time, we are about trading against the trend. So this is not a financial advice, and it's not an advice for you to trade against the trend. You're supposed to wait for a proper retracement to the downside. Are you getting it? Before finding a demand to see if we can continue US oil on the daily time frame to the upside. Are you getting it? Because the market's trending perfectly. Well, this is a very, very, very good, ABC. We had here a rally based rally. We had to the upside. So I would have been glad if you can travel down back to the major areas of, previous resistance out on support before we continue going. I would love to see this structure build. I get it. Love to see something like this build. So I would have been waiting for, this entry. If I want to wait and preserve my capital and not get stopped out, I would have been waiting for these daily structures to form. Or at least if we are seeing opportunities on the lower time frames and the market is trending perfectly well, why not take those trades? Why not take those trades? Remember, we took this all this way from 1974 to 1990. This was 16,000 pips trade I think took, and right now we're getting a retracement. So after a 16,000 pips trade, at least even though you don't trade for the next 1 month, you're still in what massive profit. So what I have right now is that I want us to trend back to this. I'm saying us trend, not that I want us, I'm saying us trending back because I'm a retail trader. I'm not one of the big what's it called players in the market of market makers. I'll just use my 1 hourly chart to take my swings. So my swings might be small on because of this retracement. My swings might not be more than 150 pips on US oil. So follow up with what you are seeing here. Follow up with the structure as it stands. The market actually, broke from a previous support and turn it to resistance. So we're trending back to continue trending to the downside. Are you getting it? This is what I'm expecting the trend to happen US oil on the 1 hourly chart. So if you have any question on US oil, you can reach out to me. Let's look at structures and look at our capitals and trend this market together. I'll continue with gold on the next one. So let me just do this US oil and upload first. Today's day still remains the 21st day of September 2022, and London session is about to begin. Take care and bye for now. Bye bye.